And joining us right now is the president of the Nasdaq Stock Exchange, where Lyft's IPO will begin trading today. We want to bring him into the conversation. Nelson Griggs is here. Good morning. This is a bit of a unique experience. We're here at a Lyft Driver Center, we should say. And they're going to be ringing the bell from here as opposed to New York. How did you coordinate that?
Well, Lyft came to us and said, here's what we'd like to do. And at Nasdaq, we have this attitude of your IPO, your way. So the team got together very collaboratively, and we pulled off an amazing setup here.
Let's talk about pricing, because this has outpriced expectations already. Over $20 billion in terms of total valuation, $2.34 billion in terms of what they're raising. What does this say about where you think the market is? And do you look at a price like that and say, this is great, there's excitement, or does it make you nervous at all?
Well, I think it's great. There's excitement. This is a unique company that's got a lot of, obviously, visibility around it, doing some amazing things, and there's great investor reception. And I think that brings more investors in the market in general. So there's also other IPOs out there getting ready to go. I think it helps the whole market.
How critical, though, is the success of this IPO for you and for the companies that come after it? I'm thinking of Pinterest and Uber and Slack and everybody else on the Zoom.
Yeah, well, a barometer for the marketplace for investors is how do previous IPOs do? I would say Lyft is very unique. So I wouldn't put it the whole weight of the market on Lyft, but certainly if they do have a good reception, which we feel they will, the market treats them well after the market, after they do open, then I think it'll set up the marketplace.
So it's the age-old question. Joe and Becky were talking about it just an hour ago. You know, in terms of pricing to perfection. What is perfection? Meaning, do you want investors to make some money on a day like today, not just today, but over the next several weeks, if not months, if not years, or do you want the company to raise as much as humanly possible?
Well, I think it's a great question. As I said, age-old question. It's an art, not a science. I think you do want to have investors get rewarded for their commitment to the company. And what that does is most companies will raise capital at least 6 or 7 times through their life cycle, around, let's say, 10 years. So that gives them more reception when they go back again to raise further money. So it's good to give something to the investors.
And what does this say, though, about, in terms of not just where the market is, but we now have a number of big companies that are not making money. These are companies that are unprofitable. And how investors, how my mother, who might be watching this morning, saying, should I be buying the Lyft IPO? What's the answer?
Well, I think the U.S. is very unique, where we're fortunate to have an investor base that pays for future growth, unlike any other. So that's why we have these amazing technology companies, biotechnology companies. So if you have the right long-term perspective, believe in the grand vision of the company and what they're trying to do, then I think you have to strongly consider it. But it's company by company, person by person, time horizons play a big role.
Okay, complicated question for an exchange like the Nasdaq.
Sure.
You guys have to compete with the New York Stock Exchange, as you might know, for these IPOs.
Yeah.
And so when you think about, if you get a Lyft, do you say to yourself, if I get Lyft, I can't get Uber? Or if I get so-and-so, I can't get... How does that work?
We would never say that. So we look at every opportunity as a unique one and try to put our best foot forward to win that business. We've been on a pretty, in our view, historical run in terms of win rates and larger deals coming to NASDAQ. So no, we don't. Would the company look at it that way? They might, but I think it's every company we try to win the business.
And in terms of just what you've seen, I mean, these guys have been on a roadshow for the past 2 weeks. There's just now a number of these roadshows. At what point do you think that, I mean, have you looked at the math in terms of how much capital is out there right now to put to work, and how much the market can take this?
Yeah, we have, and I wouldn't want to put any fear in the market, but there is some concerns that other stocks that are already public, there could be some, taking profits off the table to invest in some of these IPOs, but it's hard to do an exact science there. There's still plenty of, in our view, dry powder in the institutional space.
So what do you think the total amount of? I'm sure you've looked at this. What's it? No, but this is a big issue, because as investors are looking at this, they're going to say to themselves, okay, we can do Lyft, we can do Uber, we can do this one, but actually once we get here, we're going to run out of money.
Well, when you look at the billions of institutional capital that's out there, trillions, right? Even though the IPO market's big, it's a pretty small portion compared to the overall public market space. So we don't feel it's a real big concern.
Right. Okay. So, last question: where are we in the cycle? Because historically, people would look at a moment like this and they'd say, "Is this 1999?" Yeah. Some people might say, by the way, people thought in 2012 that the market was getting toppy because there was sort of an IPO little sprint or run there. So where do you think we are?
Well, I'm traveling a tremendous amount now, making pitches and trying to meet with companies. We have a huge backlog right now. This year will be very strong as long as the deals perform going out through the fall. We're already talking to companies that are preparing for that. I think there's a little bit of concern that maybe 2020, with an election year coming up, could get a little choppier. So there's definitely a momentum right now. The deals are performing well. Last year's deals were performing great. So I think overall we have a pretty healthy market that could continue for a while.